My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you some money. My job is not just to entertain, but to educate you and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Early last week, when the market was getting hammered before I went on vacation, yes, indeed, I was on vacation. I don't do that usually, but I had to take one. I kept reminding you that good things can still happen. Sure enough, today we got a confluence of great news that made people want to buy hand over fist. Buy. Hence why the Dow surged 373 points, S&P shot up 1.3%, and the Nasdaq pole vaulted 1.75%. All right, what happened? What happened to trigger this? What happened? Remember the consensus on Wall Street is that we're headed for a recession, right? Well, then we learned that the White House has restarted its trade talks with China, and we got some strong economic data, including a terrific jobless claims number. Put it together, wrap it up. I should have done that. I should have gotten a bow, wrap up a box, and you've got all the ingredients for a spectacular rally. So where do we go from here? Isn't that what matters? That was history. Before I break down my current worldview, let me give you some anecdotal evidence about where we are, or at least where we thought we were until today. So I'm walking down the street, going over to my small plate, Mexican place, the San Miguel. What I'm talking about. And a very nice neighbor stopped me and said, will there be a recession? I said, no, I don't think so. But then she tells me how everyone's saying there'll be a recession. I explain I'm not one of those people and warn her that you have to be careful when everyone's in the crowds expecting the same thing. She just walks on. Oh, then this morning, while I was on way to Squawk on the Street, a construction worker reached out and fist bumped me after saying he's an avid watcher. But then he looked at me with a bit of a fear. He was shaking, And he said, we're about to go in recession, aren't we? Shouldn't I be worried about my stocks? I told him, listen to me. I don't see a recession coming. We'll walk with him a little. He came right back. He wanted to know whether he should dump his stocks if we do get this slowdown. I reiterated, I don't think it's happening. But he didn't buy it. Either way, I told him to stay the course. I bet she sold today. Why are so many people terrified right now? Frankly, I think it's a 1-2 punch. They're worried about the president's tariffs because trade wars have sometimes been very, very bad for business. And they're worried about the bond market because the media keeps telling them to worry about the bond market. It is difficult to explain the inner workings of the bond market. Go read Sidney Homer's bestseller, Inside the Yield Curve. It's like 500 pages on the yield curve. The press has a bad habit of oversimplifying the yield curve. They say long-term interest rates are below short-term rates, so you should be really worried because that's the dreaded inverted yield curve, and it's something you really need to be scared about. And they always stress that this happens right before a recession, and they scare you, and they scare you, and they scare you, and they scare you, and they scare you. I totally get it. The real impact of tariffs is hard to assess and explain, just difficult. I mean, the president tells you the Chinese are paying for it. Media says you're paying for it. Somebody's paying for it. Hey, same goes for this inverted yield curve. Having both of these negatives on the table makes it easy for commentators to predict a recession, especially since no one ever holds the bears accountable for being wrong, except for me. And look, there is a visible slowdown versus least last year. There's no doubt the trend is down. I mean, all those tax cuts and stuff. A reversal of that trend, a reacceleration, so to speak, is almost never in the cards. The negativity does become self-fulfilling, which is why random people on the street keep asking me if they're headed for a recession, and then they want to sell their stocks. But then you get a day like today, and the bulls finally have some ammo. And the bears are on the run. First, in the never-ending saga of those trade talks with China, we learned that there will be some important negotiations with a high-ranking Chinese trade official coming here in October to meet with Treasury Secretary Mnuchin and Trade Representative Robert Lighthizer. China's Commerce Ministry issued a statement that serious mid-level discussions will start later this month to prepare for the visit. Remember what I told you, the media trust the Chinese more than they trust the president. Whatever. Hey, remember when everyone was fretting about whether or not the president told the truth when he said the Chinese had called him? I told you it didn't matter either way, because true or false is signaling a willingness to deal. Twitter haters. That was right. These talks sounded substantive enough to ignite the cyclicals today, a group that's been lagging the overall market pretty badly because people were worried about a trade war, same with commodities. Second, we got some terrific payroll data from ADP. Well, hey, listen, they're the largest payroll processor in America, good stock too, along with pretty low jobless claims, well, neither of which were expected. Tomorrow we see that Labor Department's employment number. Things could get ugly if they're disappointing, but after what we learned today, I suspect they'll be solid. Third, after the market opened, we got more bullish data. The Commerce Department reported that new orders for manufactured goods were up 1.4% in July, when the experts were only expecting a 1% gain. I heard some guy on our network saying today that manufacturing is in a recession already. It's hard to reverse these negative perceptions. I do my best, but I'm just one guy. Consider that in June, manufactured goods were up just 0.5%. These numbers are accelerating. Does that sound like a recession to you? Fourth, the combination of these positive data points allowed long-term interest rates to shoot higher. Everyone's worried that long rates are too low. That's the big warning signal that a recession is supposed to be inevitable. When long rates go back up, that tamps down the slowdown chatter and allows stocks to rally. So what happens with the stock market in general? You do get a sea change in what's happening, what's working. Let me give you a classic example. It's a company I like very much, and you've known them. They've been on a lot. Union Pacific, big railroad, right? Yesterday, the company slashed its outlook based on a mid-single-digit decline in rail car loads because we're no longer exporting much soybean to China, and the trade war is starting to hurt their intermodal traffic. That's those big metal containers that they come off. There's like 15,000 of those on one of those big ships, and then they come off and they go on railroads. However, Union Pacific stock refused to go down. There it is. That's the signal. And today it rallied hard, up nearly 4%. Why? Well, thanks to the better economic news and the possibility of a trade truce, and maybe we're at the bottom. Of course, all the China stocks, 3M, Honeywell, Caterpillar, caught fire. I like this Caterpillar here, by the way, even though I keep telling you they have less Chinese exposure than people seem to think. The slight rally in commodities like copper and oil was far more important to CAT than China. I know lots of people are worried about the tariffs leading to higher prices at retail, but one look at the action in Jay Powell, take a break from your screen or whatever you're doing and look at Watch. Watch is my acronym for Walmart, Amazon, Target, Costco, and Home Depot. The action in those stocks tells you everything. Aside from Amazon, all these stocks are within spitting distance of new highs or are there. For these big changes with great management, business is strong. Why? Well, we learned that Target is sticking to their suppliers, telling them to eat the cost of their tariff hikes. Target's the smallest of the watch names, but they still have the clout to strong-arm their suppliers. Don't own the suppliers. Again, this is my thesis playing out. The big five retailers have too much power for the tariffs to cause them serious problems. It's where we all shop. Sure, most of the strength in retail is concentrated among watch, but it's strength nonetheless. Finally, we get this fabulous bifurcation in tech. The tech stocks that need the economy to roll forward to accelerate all had a fabulous day. I want you to think about like the commodity chip makers like Micron, okay? Meanwhile, the secular growth tech companies that don't need a strong economy saw their stocks get clocked, even as they were ultimately able to rally back from some very big losses. How long can this goodness last? Wrong question. The bottom line is that nothing much has changed. All the trade talks so far have been ridiculous failures. Every positive data point's been followed by a weaker one. But there's one big difference. Maybe some pleased commentators will ease up on the desire to endlessly call for a recession, at least for a couple days, unless, of course, the non-farm payroll report stinks up the joint tomorrow. In which case, here we go again. And my neighbor and my construction worker friend, yeah, the fist pumper, will once again be needlessly scared out of their wits, and more important, at least to this show, their stocks. Hey, let's go to Joe in New Jersey. Joe!
Hello, Cramer.
Hello, Joe.
I want to thank you for all your great advice in helping my portfolio grow.
Thank you, partner. Good to hear. What's up?
My question is on Canada Goose.
Yeah.
I bought them on your recommendation, and I want to know how will the trade deal with China affect them, and is the animal rights organization PETA going to be a concern?
I am worried about PETA. You know, I was a member of PETA for a very long time. I haven't re-upped just because I'm off of it. I think Canada Goose is fine. It's just not great. Why? Because it's a supplier, and I'm trying to get to the bottom of this and recommend Watch these days, which is Walmart, Amazon, Target, Costco, and Home Depot. That's the way we got to go. I mean, it's just we got to go with the companies that have the power. All right, anyway, I know there's lots of worries about an impending recession, but I'm feeling a bit like it's much ado about nothing right now. Hey, Shakespeare still has game on Made Money Tonight. It's that time of year again. I'm getting ready for some football, And with kickoff a few hours away, I'm revealing my dream stock draft for you and your portfolio so you understand stocks better. Then, Carvana is bringing car buying by click to the critical masses. But how long can it walk the growth tightrope? I'm going to speak with the CEO. And high Fed rates, tariffs, and Chinese trade wars are all just distractions in this market. I'll tell you what's really pulling the strings. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.